Looking backwards is one way to think about investments and learning from your lessons. But I think what is also as important, what is potentially going to happen to this investment universe in the future? Whether it's real estate, whether it's private equity, whether it's hedge funds, any investment class will go through its own set of transformations. As human intelligence is evolving, so are we in terms of the way we live, the way we trade, the way we interact, and the way we govern. Therefore, whilst the past is a good indicator of what has happened and what we learned from it, it is key that we understand what we will be doing in the future.
One of the key risks that are inherent in any investment decision-making process is emotional bias, particularly for our private credit strategy, where we spend a lot of time conducting extensive due diligence on our investee companies. We tend to build a rapport with the stakeholders, whether it's management team, shareholders, or the likes. There can be some emotional bias creep that comes into cloud our investment decision process. What we have done is designed an operating model, or an investment operating model, whereby we appoint an independent investment committee, and it's the role of this investment committee to take an objective, independent view on any investment proposition that we may propose to them, and thereby taking out that element of emotional bias.
When investing in assets, you need to be thoughtful and detailed and undertake a lot of research. Short-term visceral decisions invariably lead to negative outcomes. Everything has to be research-driven. The minute you start making visceral decisions, you invariably make snap decisions which end up being incorrect and lead to poor outcomes or bad performance. The opposite to that is obviously to be thoughtful, be rigorous, take your time making your decisions, and make sure you've done all the analysis and due diligence you need.
We've very much adopted Pictet's philosophy of being the best, not the biggest. We've specifically designed our strategy to focus as a value-added partner in the lower mid-market, which is a niche that we feel we're differentiated in and where very few of our peers operate. And therefore, we believe that we can offer a very attractive risk-adjusted return proposition to our investors.